We're going to talk about 5 points about trading the news. My name is Yohay Elam. I'm the founder of ForexCrunch.com. I write a significant part of the articles, and I have other people writing for me. A little bit about myself to begin. I'm a former retail trader and computer programmer, made a career as a computer programmer, and later on I founded ForexCrunch back in 2008 around the global financial crisis. The site features many types of content, but fundamental analysis is what I like most and what I do most. Okay, let's start. In this presentation, here are the 5 points we'll cover. Understanding what is priced into the news and what isn't. Identifying what currencies are weaker, which are stronger. Getting some help from news events, from reactions. And I assume many of the visitors of FX Street, I don't know if many of the participants here prefer technical analysis. I guess if you came to listen here, then perhaps you're a bit more into fundamental, but we'll try to look at how to combine fundamental analysis in order to identify false breaks on technicals using the charts. We'll cover a few currencies. We'll talk about which have the best fundamental, best reactions. And finally, we'll just talk a bit about one very common pattern and have recent examples of buy the rumor, sell the fact. I'm sure some of you are aware of it. Okay, just a few words about fundamental analysis. Basically, what moves the markets in the long term are economic indicators, fundamentals. They make the long-term trends. When I used to trade, I used more fundamentals for for seeing the big picture, and technical for entry points. Some people, I'm not the only one that does it. Basically, a stronger economy has a rising value of its currency, and the lower bad economy has a weaker one, as this nice image shows. But it's not always that simple. Let's see. Currently, QE, quantitative easing, I'm sure you've heard this term, is the main focus of the markets. If the Federal Reserve prints more dollars, then the dollar weakens, and if it prints less, the dollar strengthens. And jobs have a major role in determining if the Fed will buy more or less, if the Fed will taper or not. Before the global financial crisis, inflation had a much stronger role. Nowadays, central banks ignore inflation, or not totally ignore, but put it on the back burner. We see that in the UK as well. Okay, let's start with the first point, understanding what is priced in. Basically, you can look at FX Street's calendar. It's also available on ForexCrunch. See what the consensus of economists is. Here's one example, screenshot from the calendar. Of course, there are some differences. Some calendars will show different numbers than others, but basically it's around the same numbers. And this is the first thing you should look at, understanding what figures priced in. So in this case, that was the ISM manufacturing PMI, a score of 51.5 points was expected. But it's not only that. Let's see. Another thing here, just before we move on, you can see some events are more important than others. In this case, the ISM manufacturing PMI is more important than construction and spending. Now, it's not only the consensus, and if the figure is above the consensus or under the consensus, sometimes we have rumors. People whisper, and these rumors go through trading rooms. They're available sometimes they become public on the web, but it's not always the case. Not all rumors are true. Sometimes it's false data. Rumors are more common with the UK data, especially PMIs, but not only that. But again, not all rumors are true or false. And also in China's case, some data leaks out. And there are some unexpected news events like credit rating downgrades. We've seen that for various European countries and also for the US. And in many cases, these rumors prove to be correct. The historic downgrade of the US by S&P back in August 2011 was rumored, was released after the markets closed, but everybody was talking about it before the markets closed on that Friday in August. And also recent, I think the Italian or Spanish downgrades were also rumored quite strongly. So sometimes the rumors overtake the initial consensus. And, well, you have to be aware of that as well. Another thing is what is priced in. Sometimes the consensus is one number, but figures change. The best example is, of course, the king of Forex, non-farm payrolls. For instance, beginning of August, we had a consensus of 180K, but then the ADP non-farm payrolls released on Wednesday, 2 days before the non-farm payrolls exceeded expectations, and also the non-manufacturing PMI and its employment component, and also jobless claims. So the real expectations weren't the ones seen on all the calendars, no matter which calendar you use, weren't 180, but were more like 200. So when the actual figure eventually was only 162K of job gains in the United States in July, figure was released in early August, then it was, of course, a bigger disappointment. If we think about it, the difference between 180 and 162 isn't that big. You can call it within expectations, but if the real expectations due to the hints are above 200K, then it's already a bigger disappointment. So in these big events, you have to be a bit more aware of the build-up, the hints, the other figures leading up to the release. Another thing in understanding what is priced in is looking at the price action. Typo here, it's just 1 hour towards the release. The price action can reflect rumors, real expectations. In the case of UK figures, you can see the pound strengthening or weakening in 1 hour before the release. That shows the real expectations and what is actually priced in. The same goes with hints. It also means that the reaction to the news will be powerful. But, so it means it's an important event and the market is making a build-up towards the event. But the point we'll reach at the end, it can lead to a buy the rumor, sell the fact response. So sometimes you can see the dollar strengthening, or let's take the UK example. Sometimes you can see pound dollar strengthening before a good release, and you know there will be a powerful reaction afterwards. If it might be an extension of this gain, but it might be a fall immediately afterwards. But we'll talk about it at the end. Okay. Second point is identifying currency strength or weakness. You can, if you're not in the market and you don't intend to trade this specific news event, just look at the market reaction, what happens around this event. It can be quite telling about the atmosphere in the markets and what's going on. So if a weak currency falls on a marginal miss, or makes a dead cat bounce on good data, it shows that it's weak. What does it mean if, for instance, we have expectations for, well, I think today was not so bad example with the euro. The ZOO expectations from Germany was released. It exceeded expectations. It was strong. All the subcomponents, the comments around it were strong. But the euro dollar just made a dead cat bounce. If you're not familiar with the term, when you throw a dead cat on the floor, it also bounces. It means the euro dollar went up a bit, but didn't go too far. This showed that euro was relatively weak, and consequently, when we received U.S. data later on, trading proceeded throughout the day, the euro fell. So we got the weak reaction to a strong figure in this case, strong figure from Germany, very small rise in euro dollar, indicated that the euro was a bit weak, and then it fell against the dollar and also against the pound. Or another, I don't have a recent example, but if we have a weak figure, but it's not really very weak, it's just very close, and you see a currency falling sharply, that means that the currency is quite weak as well. Moving to the other side of this equation, when a strong currency jumps on a minor improvement or doesn't crash on bad data, it shows that it's strong. We can see that actually today with the US dollar. The surprise in the retail sales figure wasn't that big. I think the headline figure was within consensus, and the core figure was 0.1% above consensus. It's not such a big surprise, but the dollar reacted quite strongly. It showed the strength, and the strength, was seen further on. The dollar kept on strengthening later on. So you can see what the feeling in the market is according to reactions to news, to indicators. Okay. Now, another way to look at it is see not only one specific currency, but also look at others. What I described here, if euro-dollar rallies on a weak U.S. release and the Australian dollar versus the dollar doesn't, that means that the euro is strong and the Australian dollar is weak. So in the next week U.S. release, the better thing to do is to buy the euro against the dollar and enjoy the euro strength when the dollar is weaker. But if on a strong U.S. release, it's better to sell the Australian dollar because the Australian dollar is weak rather than selling the euro, which is relatively strong. Because U.S. dollar is the major currency in the market, but the individual reactions of different currencies are not always the same. So it's important to identify which currency is strong and which one is weak. And you can use this information in the next news release. And here we have the other example. It's just a mirror of what I said just now. If the euro-dollar rallies on a weak US release and the Australian not. Oh, that's what I said before. So we can use the same information also on the individual currencies. So in this example, when the euro is strong and the Australian dollar is weak, then it's enough to find an okay or better than expected European release to buy the euro and to ride on it, or on the other hand, on a minor miss in Australia, or of course on a bigger fall, it's an opportunity to sell the Australian dollar in this example. So you can use the weakness and strength of currencies on US events and also on the local events. Okay, so now we'll move to the third point, identifying false breaks. Currency pair sometimes breaks important levels on news events, often, but can also retreat. We see, market conditions are more choppy around news events, and false breakouts happen. Sometimes these false breakouts or these retreats are just a preliminary stage to the real breakout, and sometimes they're false, and that's it. Let's see. So let's say we have a good European release like we had today, and let's take what didn't happen today. The euro dollar breaks higher in a knee-jerk reaction, immediately rises, but then retreats, and we can probably expect a follow-through. That means euro dollar made its way to higher ground, but didn't follow through. But generally, it was a very good figure, we can expect it to continue later on, and it would be considered just the first attempt and before the real break. On the other hand, on a bad release, if we see a false break, if there was no follow through, you can continue with selling it later on the real break. Just a good example. And if we have a good European release and euro-dollar surprisingly breaks lower and then retreats, it's probably a false break. There's a higher chance that it's a false break because we had a good figure, and then we can buy the pair within the range and trade it higher. And on a bad European release, euro-dollar breaks lower and then retreats, I have an opportunity to sell it. Basically, covered all the cases, but points are clear. When identifying false breaks, we should check out the larger trends. In general, is the currency pair going up in the bigger picture if we enlarge the time frame on the daily or weekly chart, or is it going up, is it going down? We have to also take that into account. And we also have to see, look into reactions to previous events, the currency's weakness or strength. And another thing probably mentioned before, how big is the surprise? If the surprise isn't really big, the small break is probably meaningless. But if it's a big surprise to the upside or to the downside, we should take it seriously. And last point here is to watch out for simultaneous releases. Sometimes figures are released together and they can be confusing. In the same country, figures can go in, one can be a positive surprise, one can be negative. And sometimes we have releases at the same time. The most common event, we have trade balance releases in the US and Canada always at the same time, or almost always. Sometimes we have, sometimes both countries release job figures at the same time. Another, if we're talking about euro-dollar, first Thursday of the month features the ECB press conference, and at the same time the US releases jobless claims. That's at 12:30 GMT. That's a very, very choppy time for euro-dollar. I would recommend taking one step back and not playing in the markets exactly at 12:30 GMT, but rather understanding a bit more what's going on. There are more simultaneous releases in the UK. Figures are released at 8:30 GMT, and in Europe many are released at 9. Sometimes they coincide. Okay, so fourth part is the best fundamental reactions, but let's start with the worst. USD to US events, of course, the most important currency doesn't always react as we expect. Things are getting better now, but they might get worse again. During the global financial crisis, I've been surprised sometimes, I'm sure all of you, when we had weak US figures and then we had a stronger US dollar. Why does this happen, or why did this happen for quite a few instances in the past? Well, the logic is as follows. Weak US figures means all the world is going down, the economies of all the world are weakening, everyone's in trouble. When everyone's in trouble, the US dollar is a safe haven. It's the reserve currency, it's the currency in which people trade. In different countries trade oil, so it's always bought as a safe haven. On the other hand, when we get strong US figures, there's a sigh of relief. People can take risks once again. Everything is getting better. So people sell the USD, and there's no need for safe havens. Another safe haven is the Japanese yen. And in the past, more distant past, the Swiss franc has been a safe haven. So this is the reaction in worse times. Now, are we in good times or bad times? We're probably in better times at the moment. Recently we had strong US figures. Strong US figures meant that there's a higher chance of tapering of QE and a stronger dollar. So it was very straightforward, normal reaction. And then we had weak US figures. We had more dollar printing, higher chances of QE, less chances of QE tapering in this case of recent months. And then more dollar printing with a weaker dollar. This is excellent, very straightforward, logical reaction, but it's not always the case. And these bad times may return as well. A lot depends on Bernanke and on someone who will replace him, either Janet Yellen or Larry Summers. We don't know yet. Okay, so another bad currency, still focusing on the bad reactions. GBP is sometimes I heard it's called the devil's currency. As aforementioned, sometimes there are leaks. It makes sharp, choppy moves. I'm sure there are fans here of the pound, or especially of the pound yen, the Gepi or dragon, but I find it sometimes a bit difficult. We have here a Carney's forward guidance from last week. That was a perfect example. Just as what happened in the UK last week is the Bank of England released its inflation report, and the new governor, the Canadian Mark Carney, presented forward guidance. This was highly anticipated, but first we had a fall of about 100 pips in pound dollar, but then it rallied nearly 300 or 400 pips, above 300 pips. Anyway, it was quite choppy, and anyway, trade with care with this currency. Another bad one is the Swiss franc, because it's basically pegged to the euro. There are reactions that exist to Swiss events, but they're very limited. And the Swiss National Bank has proved its strength in defending the peg, the euro-Swiss peg. So I wouldn't bet against them. It's working for nearly 2 years. So don't bet on Swiss franc strengthening. Okay. Now let's talk about the better reactions. For the US dollar, for US events, dollar yen. Why? Because the yen is also a safe haven, despite the recent Abenomics. Japan started a very ambitious monetary policy, loosening, printing more yen, and the government is doing more stimulus. So we had more action in the yen, but basically it's still a safe haven. And things get worse in the US, if things get worse all over the world, it's going to be even a stronger safe haven. Another thing is that US yields are correlated with dollar yen, so if we have better figures in the US, we have more chances of less bond buying. It's higher US yields than a stronger dollar yen. The caveat here is watch for the Nikkei. We've seen recently that dollar yen moves best according to the Nikkei stock index in Japan. During the Asian session, when the Nikkei goes up, dollar yen follows, and when the stocks in Japan fall, dollar yen falls. But anyway, for US dollar releases, this is the best currency pair in my opinion. Okay, USD CAD, beware of course of simultaneous releases, but dollar CAD, even it might be a bit boring for some of you, but it moves in the most expected, most normal, most straightforward way, and usually it also gives time to enter. So you have better than expected Canadian job figures. The Canadian dollar strengthens against the US dollar, and USD CAD rises. But it continues rising afterwards. It's not a knee-jerk reaction that is followed by movement in the wrong direction. So, it's not always the case, but it's a relatively good currency pair to trade on for Canadian news events. Australian dollar moves very nicely on Chinese releases. They're very good reactions. It usually, or at least sometimes, overshadows Australian numbers. So if you have at 1:30 GMT an important, seemingly important Australian release, Aussie against the dollar will move just a bit. 15 minutes later, half an hour later, there's an important Chinese release. So Chinese events such as GDP, CPI, retail sales, industrial production, or of course the manufacturing PMI are very important figures to watch for Australian for the USD. But yet again, the moves are not necessarily sustained in the European session. So if you're in the Asian time zone or awake at night here in Europe or in the evening in the US, perhaps it's better to close the positions before London enters before the European session. Kiwi dollar. Also here we have more straightforward reactions, more long-lasting moves. But the trend in New Zealand, a bit less in Australia, but New Zealand is that there are few releases. Many are quarterly. Employment is released quarterly. Retail sales as well. GDP, of course, like everywhere, almost everywhere. So there are less opportunities and movements are a bit slower. You know, it's not such a popular currency pair. And euro dollar. I think it's better to trade on German events. Many still, despite today's movement, many people still see the euro as the new Deutschmark, and Germany's big surplus on trade is also important. So I think it's better to trade on German releases such as ZU, IFO, even trade balance sometimes, and of course the GDP, which we have tomorrow morning here in Europe. It's better than, in many cases, better than all European events. Of course, apart from the rate decision, which is what I'm talking about now. We always see an erratic reaction to what Draghi says. Each time he says downside risks, which is usually a very common part of his text, you see the euro fall. It's usually a false move. And it's important to note that his moves, Mario Draghi, the president of the ECB, zigzags from optimism to pessimism, from rate decision to rate decision. We had optimism in July, May, and March, in August, June, and April. In July, May, and March, we had pessimism. So markets move very strongly with the ECB, but it's a bit more choppy. Debt crisis in Europe is still going on. Currently, countries have, like here in Spain or in Italy, they have access to markets, and so the debt crisis is a bit on the back burner thanks to Draghi's OMT. But it's still something perhaps to watch in the future, maybe after the German elections. I had a webinar about that, I think 2 months ago. So we might see reaction to peripheral yields, Spanish yields, Italian yields, and also Portuguese and Irish and Greek to a lesser extent, after the German elections on September 22nd. In the meantime, it's a bit muted. Okay, and now the last point. I also found a book about it, apparently. Sell the rumor, buy the rumor, sell the fact. One of the most common patterns. So if you have rumors or high expectations that the figure will be strong, in order to see an extension beyond these figures, you need a really, really big surprise, much more than the rumors or much more than expected. But if you have, if you see the figures come in as expected, you might see the opposite reaction, even if it's a good figure. Or in the case of a weak figure, you can see currencies move higher. Let's think of it. Yeah. Just recently, the Australian rate cut. Everybody was pricing in a rate cut in Australia. Inflation was weak. Central bank made hints. Australian dollar weakens. Aussie against the US dollar fell below 90 cents. And And then the Australian Central Bank, the RBA, made its decision, cut the interest rate from 275 to 250, exactly as expected. And what happened? The Australian dollar leaped. Common sense would say rate cut means lower motivation to hold Australian dollars, but this was priced in so strongly that Aussie rose. Another example, what I mentioned before, is Carney's forward guidance. Basically, this was weighing on the markets. Markets didn't know what to do, and once it got out of the way, even though he promised to keep interest rates low for a long time, which is a bearish thing for the currency, eventually pound dollar jumped against the euro as well. Another thing, again, we didn't have it recently, or it didn't grab the headlines, but we might have it during the fall or winter here in the northern hemisphere. We had fancy Eurogroup announcements about more aid to Greece, or decisions about Cyprus, or all these things usually are leaked ahead of time, and they're priced in. So when the actual thing comes out, such as the Greek PSI back in March last year, it's already, we have the buy the rumor, sell the fact, means that a positive figure is already, a positive announcement from the Eurogroup, from the IMF, is already priced in, and the euro falls despite this announcement. Okay, that's it. Let's see if we have any questions. How do you trade the news? Let's see. Anybody has any questions? Roy, Q&A. Any about fundamental analysis about euro dollar? You can ask questions that are unrelated if you want, about tapering, about current market moves. Anything else you want to ask? How do you balance fundamentals with technicals? Oh, that's the point I mentioned. Thanks for the question. The point I mentioned at the beginning, fundamental analysis, or what's going on in the markets, they determine the long-term trends. So, and if we, I don't know, the Japanese government is making an effort to weaken the yen, so eventually the yen will be weaker. But the market is not a one-way street; it moves in both directions. So, looking at technical lines, support and resistance can supply opportunities for entry points, exit points, as I mentioned, false breaks. So it's more of big pictures, fundamentals. Technicals are used for looking at the details. CHF currency, okay. In September 2011, the Swiss National Bank stormed the markets, said it would not allow the Swiss franc to be so strong because it hurts the economy, it hurts exports, causes deflation, and they decided that to put a floor under Euro Swiss. So this floor is 120. Since then, the Swiss National Bank bought a lot of euros and then diversified it. But anyway, really kept up to its word and bought unlimited amounts of foreign currency in order to keep the franc weak. Since then, they followed up, and so there are many forces intervening in the Swiss National Bank and people betting against it. So it doesn't always react so well on fundamentals, especially Swiss fundamentals. We need to see different statement from the Swiss National Bank, makes quarterly rate decisions in order for the situation to change. Or we need to see a much stronger euro in order for this cross euro Swiss to get away from the 120 level, and then we can see some more normal movements. What do you think of US twin deficits? In the meantime, we'll get back to the here's a Swiss slide. Twin deficits, well, and the really long term, the real long term, US runs deficit in the trade balance, and the dollar is weakening if you look at the historic perspective. And then if you don't look at this very, very big picture, the economy in the US now is getting better, and the US is making an effort. Well, the Fed will probably taper bond buys, so the dollar, in my opinion, has scope to rise. Regarding the deficit in the government budget, I think that's what you're talking about. It really squeezed in the last few months, thanks to the sequester and other things. It's lots of details, but anyway. I think eventually the US will manage to balance, the government will manage to balance its budget. And that won't be such a big problem, especially not the debt ceiling. So in the very, very big picture, it's more important to look at the trade balance deficit, not government deficit. If US would be business, would be bankrupt by now. Well, I don't know. The US has a lot of debt, the highest in the world, but if you look at it compared to its GDP, it's not that bad. Japan, which is a very rich country, has debt to GDP ratio of over 200%, which is much more than Greece. Luckily for them, everything is, or most of it is held within Japan. So, I don't know. I think they're doing quite well. So, being bankrupt or not doesn't have a direct influence on currencies. And as we've seen in recent years, central banks can print quite a lot without steering huge inflation. So probably it's here to stay. Yeah, pity we can print. Oh, we can print. Well, it's a pity, for instance, that Spain, I live in Spain, cannot print. Inflation here is relatively low, and printing pesetas maybe would help the economy, but help the banks. I don't know. That the European Central Bank controls everything. What's the best news release to trade? Is it inflation, GDP, or employment? Big movements, unemployment. In my opinion, inflation has less and less influence. In the UK, inflation is higher and it has a bit more influence, but it's not that big. In the Eurozone, only when inflation really fell was an indication that, only when inflation fell in Germany, it was an indication that the ECB would cut the rates, but usually it doesn't have a lot of impact. GDP, of course, is very important, but in the last US GDP release was quite mixed and quite confusing. GDP is more important in the UK. I think employment all over the world, in Australia and Canada, the Eurozone, maybe a bit less in the UK, and of course in the US, the on payrolls is still the king. Reaction to the news. I missed this question. How long can it continue with the Swiss franc? I don't know. The Swiss National Bank, SNB, is very, very persistent. it's working quite well. Well, officially until inflation rises in Switzerland, but I think that if the situation in the Eurozone improves, we'll see, and the euro will rise against the Swiss franc, maybe it will be an opportunity for the S&P to stop its policy. I think it's at least a year away from now, if not more. If reaction is big and weak, is data? Yeah. Who's Roy? Like this image of Bernanke with the dollars. $1 trillion. Any more questions? Or did I miss anything? Gold. Well, I'm not following gold that closely. Basically, the logic is as follows. As long as the Federal Reserve buys bonds, bond buying, printing of dollars spills into commodities, it spills into stocks. It means gold is supported. And if the Fed tapers bond buying or even tightens somewhere in the distant future, then it's negative for gold. But that's not the only thing that moves the gold. It's sometimes news about the Chinese demand for gold, Indian demand for gold, mining news, but I don't follow that closely. I think QE tapering news has the most impact, but it's not a one-way street. Oh, thanks. Thanks for the nice words. Weddings in India. Well, everything has an impact. It's like a butterfly moving its wings. I don't know. I mean, gold is not only dependent on speculation about printing of dollars, but also on demand of physical gold. So if there are more weddings in India, it's positive for gold, I guess. I can recommend a site of a colleague of mine, Trading Energy, tradingnrg.com. He follows gold very closely and can get much more information over there. Yeah, it's China. Let me see if I can write that down. All attendees. China, there's big demand for gold in China as well. It's something in the culture, so but I'm not that familiar with that. So. Oil. The same logic works for oil, but also I think in even more limited manner. More printing of dollars pushes commodity prices higher, including oil. Less QE pushes oil down, but it also depends on the global economy. When you have good news from China, oil tends to go up, or from the US, and the other way around. So it also depends on production. The US is making advances in oil production, shale oil, fracking. So it should push the price of oil lower, but that's not happening. On the other hand, if you have a recovery, the price of oil is going up. So for oil, there's one news event that does have an impact. It's the U.S. inventories. I think it's published on Wednesdays. at 2:30 GMT, and a rise in inventories weakens oil, and the drop in inventories strengthens it. So, US oil price at max, well, I have no idea. Sorry. But, of course, oil is, if oil prices rise too much, it weighs on the economies of all the world. It's good for the Canadian dollar. Again, as long as it doesn't choke other economies. So Canada produces oil, so stronger oil prices have a positive impact on the Canadian dollar, vice versa. Any more questions? Does anybody have any more questions? Anyway, thank you very much, everybody, for attending this webinar. I hope you learned a thing or two, or helped you enhanced your thinking. And next time you see the news, all in all, this summer isn't that bad for currency trading. Thank you very much. I think the beginning of September we have lots of news events, German elections, the SIP taper. I don't know who owns the credit for this word, but I think we'll see tapering in September, and we'll have lots of more action. Anyway, thank you very much for attending, and all you guys who aren't on vacation. I'm not on vacation either in August. I'm sweating here, but I'm just kidding. Anyway, thank you very much. And if you have any more questions, I didn't show the last slide in the presentation. So here are my contact details. This is my email address. You can send me any questions or follow me on Twitter and ask questions there, and visit, of course, my website. The last thing I'll promote is that I launched a new application for Android and for iOS. You're welcome to download it. And that's it. Hope to see you all again. Anyway, yet again, I'll say you can ask me questions via email or Twitter. Well, thank you very much. Goodbye.